think there's three things really at play. One, Fed news, inclusive of what is happening in discussions today, and of course, what happened in Jackson Hole. More of the reaction, you're right, is muted on equities, but there's reaction on the dollar. The dollar is retreating, it's weakening, which is actually good for companies that have large global revenue exposure, which happens to be majority tech. So keep that in mind. But there's also movement within fixed income, within the back end of the curve, which is really steepening, telling me that perhaps that's more fiscal driven. And then the middle of the curve, those 2 and 10 years are falling, which is showing me the bond market's reaction anyways to Fed policy. Now, equities, they move on earnings potential. They care about Nvidia, which is of course later this week, and PCE. And I really think the number to pay attention to beyond this is employment numbers. Historically, if we see large cracks and that's when the Fed starts cutting rates, that's when the Fed is too late. So I think the employment number could be a bigger catalyst than we realize because it's going to tell us if the Fed was too late, if they're early, reaffirm it. I really want to see it come in line.